So we often hear that blockchain gains its stripes in developing countries. And yes, that's true. But I'm here to tell you money problems, access problems, timing problems, these exist everywhere. So if you're listening to this, you're probably nodding your head right now because unless you have the luxury of never checking your bank account, you probably think about money. And you probably think about money a lot. When is your paycheck hitting? Did it clear? Will it cover rent this month? Did that freelance payment finally come through? And if you're a small business owner, you're living this from the other side. Did your client's check process? Do you have enough in the account to make payroll on Friday? What if it just doesn't clear in time? What if you're running a company with remote workers across multiple countries? Multiply that stress by every jurisdiction, every currency, every banking system that doesn't talk to each other. This isn't a developing world problem. This is an everyone problem. The difference is, in some parts of the world, it's not just stressful, it's catastrophic. Fees eat 10% of a paycheck. Transfers take a week. Your currency loses value while the payment is in transit. Or worse, there's no way to receive international payments at all. But here's what gets me excited. We're not talking about fixing this someday. We're talking about fixing it right now, at scale, with real numbers, real companies, real people getting paid. So today, I'm speaking with Ruben Galindo, co-founder and CEO of AirTM. AirTM has been in the trenches of this problem for 11 years. They've processed over $1 billion in stablecoin payments. They're paying 250,000 workers across 150 countries, and they're saving companies 20 to 25% on cross-border payouts. This conversation is about how we got here, what's actually working, and why this matters for everyone. Whether you're a freelancer waiting on a $500 payment, a startup trying to hire talent in new markets, or an enterprise moving millions across borders every month. Because when payment infrastructure actually works, every single one of us will feel it. So let's get into it. So, Ruben, I was actually sitting in the front row at Meridian during your conversation with our Chief Growth Officer, Jose Fernandez de Ponte. And you said something along the lines of this really stuck with me. The only cure to being early when you're starting a business is to be very patient. So AirTM is about the same age as Stellar. You've been in this for 11 years. You've lived through FTX, regulatory crackdowns, the Venezuelan government literally chasing you. So what's the conviction that kept you going through all of that? I
Oh, I
think
think
most
it's
most founders might have quit by now, by the way. Maybe at year 2, maybe at year 3, I don't know.
the founder journey is one of reminding yourself why you're doing it through time, especially if you're early in an industry that's just being born, like today, 11 years early, 11 years after. And I think I've had many different reasons for the answer to that question that have kept me going. It started out being very much deep alignment with the vision of, I think, that crypto and its promise, and the idea that there were some people in some countries that did not have access to financial freedom, right? And in Venezuela, people could not save dollars. And we thought that was crazy, like totally crazy, because it was 2015, 2014. How could that be? There was Bitcoin already. There surely be a solution that people could use to avoid these controls based on this new technology. We need to build it. It needs to exist because it's unfair. And I think that sense of unfairness kept me going then. And then I think what gets very exciting as a young founder and entrepreneur, I was 24 back then, is early signs of product market fit and validation for what you're doing. All my friends were getting jobs at like McKinsey or whatever bank, Goldman Sachs, the best rated ones in school. And I was off on the side doing my own thing, but I thought it was very cool that people were using this thing. It was very exciting. And it was also very
Yeah.
exciting that it was important to us. And then I guess there's a little network effect, right? Where it's not just you, it's all these people that you think are relatively smart that are also saying, hey, let's do that. That's just so cool. Look at that. And I think you sort of pump each other up. And then I think it's become, I think, more personal of a
Mm.
battle. Like, I really need to do this. I think it's important for the world, but it's also very important for me to be able to do this. And I started it, and I'm going to finish it. And I will do whatever it takes. And
At some
I
point, I'm going to
will,
ask you, at some point, I'm going to ask you, what does finish it actually mean? But not yet, because there's a bunch of stuff to go through. But that's an interesting thing to keep in
yeah,
your mind.
But I think it's that journey that I would like to. And by the way, very short and briefly, the end is for AirTM's place in the world to be forever. I want AirTM to be a generational company that exists without me needing to push it through patiently through years of just love and care by the very founder, right? And I think that's what I ultimately want, and
Mm,
I need to keep fighting for that to be the case.
yeah. Patience is hard, man, but I think it's the one thing that we all need
Yeah,
to do, especially when we're in like a new space like this, which we're ahead of a bit, and then you catch up to the market, and then you can move faster. So, for people who are less familiar with AirTM, can you give us just a quick overview? What do you actually do, and who are you serving?
totally. I think that's an excellent question because listeners might be people working for marketplaces, working for infra providers, stablecoin infra providers at any point in the stack, people that, I don't know, just ecosystem members or teammates of yours. And I think, if you sort of break stablecoin payments from the origination to the destination, you see a lot of BVNK is pioneering hosted wallets, stablecoin payment infra for a lot of marketplaces and other payment service providers and the like. And Bridge is sort of giving that sort of first leg liquidity and account setup.
Yeah.
U.S. dollars, euros, stable coins, and stable coins, U.S. dollars, euros. Then the other side, once the stablecoin payment leaves that infrastructure, it needs to go somewhere. And I think AirTM is the only truly global stablecoin wallet where no matter where you are, if you have AirTM and you receive a USDC or a stablecoin payment because we're compatible with anyone, you can cash out in 6 minutes to 488 payment methods at less than 2.5% rate, which is truly transformative because I think we need to realize that as an industry, it's not about just delivering electronic cash to people. PayPal has been doing that forever. Granted, this one's a decentralized balance. It can move to any wallet freely, should anyway, but it needs to get converted into local currency. And PayPal is struggling very, very much to convert that electronic money into local currency. And they have been struggling for 20 years. I think we need to realize that we're going to struggle as well. And I think that's why AirTM is very powerful, is because we transform a multi-day process to convert stables or just electronic money
Right.
into local currency into a 6-minute process. So that's what AirTM is.
How many users?
Oh, wow. Millions of churned users. No, I think we have we have hundreds of thousands of active customers that are using AirTM to fulfill some sort of financial flow every given month. So less than a million, hundreds of thousands,
But you
and
have, so those, but you're defining those as active users, but you have millions of
yeah,
users that with your wallet, and your definition of active means that you count them differently.
yeah, they're transacting and using us within a range of time that's for us constitutes, hey, these guys are active, not sleeping or something. And they basically fall into different categories. We're very much focused on those customers that need AirTM as a part of their I work online tool set, and I
Hmm.
need to receive a payment and I need to cash out and I maybe need to invest my money and maybe I need to send it, maybe I need to pay for something online, maybe I just want Netflix. So that's our core sort of ICP, our ideal customer persona, is the online worker. But then we have people using us for remittances. We have people using us for just small peer-to-peer settlement. And mainly, we have a lot of enterprises using AirTM's payment services, which, as opposed to BVNKs, they actually have a destination. They have a specific USDC wallet address on Stellar that's hosted within the AirTM app. And so we have enterprises that range from like Tech Mahindra to Scale AI that deliver payments there. So that's the sort of mix of people who use us.
And so I want to take you back to that mission-driven focus that you mentioned. I remember when NPR did the NPR's Planet Money did the episode about AirTM way back in 2018, which seems like eons ago. Um, so they featured a woman named Mila in Venezuela who was storing her savings in sacks of sugar because her currency was collapsing faster than she could spend it. So take us back to that moment. What was happening in Venezuela, and how did AirTM become that lifeline for people like Mila?
So in Venezuela, there was this hyperinflationary spiral, which resulted in the local fiat losing sometimes 50% of its value month over month.
Crazy.
It's very crazy to think that Mila would have better chances of preserving the value of her money by buying sugar and then selling it the next day than actually keeping cash. Because you're going to be able to sell the sugar at whatever its value is in the future, but my cash is not going to hold its value in the future. And I guess hyperinflationary spirals, they happen because there's countries that don't understand how to leave the central bank alone. And they think that by debasing currency, by issuing a lot of fiat and fueling some sort of local agenda, they might be able to compensate by the loss of the dilutive value or the diluted value of money after they've paid for all these things through debasing the currency, through printing more of it. And because people understand that that's how their system is ran, they understand that tomorrow there's going to be more money representing basically the same amount of value. So each unit is going to be worth less. And so you better go and sell it. You better go and buy sugar. And that compounded with the actual debasement of the currency, which is the fear of money being worth less tomorrow, compounded with the fact that it will actually be worth less tomorrow, it puts an economy in a hyperinflationary spiral where bad money really, really needs to get out of it, or people really need to get their savings out of bad money and into good money. And so that just drives the price of good money up. And, at that point in time, still probably that was the US dollar. Now we're sort of repping USDC and then other stable coins, but that is what caused the situation locally. And of course, to control this, the system tries to, the government or the system, the dictator and his cronies, they try to just throw this, I guess, this very heavy cap on a gushing sort of vein or broken well. And there's a lot of pressure boiling up, and there's equally amounts of pressure pushing down, right? The government is trying to scare people into using their own exchange rate, which they use that. They force people to buy dollars at an official exchange rate, pushing everyone who buys money at the free market rate into a black market. And as people get pushed into this black market, they have to do not very conventional things that you or I wouldn't think about having to do. Like, hey, let me take my cash in like a sack. It's a lot of cash now because you cannot fit so many zeros in a bill, and so you need like so much cash. I need to take it to a place, and then that person will give you physical dollars or maybe a bank transfer in the U.S. or something if you are lucky enough to have a bank account in the U.S. And then I'm going to save that cash under the mattress. For us, that was like, wow, no way. We can solve that?
Yeah.
Yeah, let's do it. So that was the first version of AirTM. Basically, it was Bitcoin backed dollars, kind of, that one could buy through Bitcoin, fund in an account, And then you could, as someone who had access to both Bitcoin and understanding that you could sell them for dollars in AirTM, turn around to your cousin and say, hey, do you want me to sell you virtual dollars?
Hmm.
And your cousin say, hell yeah, I'll do that instead of going to the street and buying cash, right? I'll keep money safe outside of the reach of my government in this electronic version on this electronic platform, uh, founded by these random group of
Yeah.
Mexicans in San Francisco. But that's better than going to that storefront and keeping dollars down my mattress. And so that's what we did. We built this marketplace for very early adopters of Bitcoin to transform Bitcoin to dollars, to turn around to their cousin and say, hey, I'll sell you virtual dollars. And we basically built an Uber type marketplace where they could meet each other and exchange the virtual dollar for the local currency, settling using their local transaction as if they were buying or selling, bicycles. But instead of bicycles, apples or oranges, they were actually selling or transferring dollars within the AirTM ecosystem and settling outside of it using local cash.
So great. And I think I mean, that's the start, right? So that's the inflation side. People need access to stable currency. But you've also evolved now into something much bigger from that and still offering that, but enterprise payroll at scale. You're now processing over $1 billion, paying 250,000 workers across 150 countries. That shift tells me that you discovered a different problem, not just currency instability, but the actual mechanics of moving money across borders. So when a company tries to pay a remote worker in Nigeria or Argentina or the Philippines, what breaks down?
So yeah, one of the main things that we realized after creating this marketplace was that it's so funny how we got to stable coins and how we got to stable coins and payments. Let me go back to Venezuela. This marketplace was working very well in Argentina and Venezuela. And we would start to open it up by adding more payment methods. Like, oh, now you can buy dollars amongst peers using more than your bank. You can use your PayPal account. I don't know why we thought of adding that PayPal payment method, but it turns out that people were willing to exchange 100 PayPal dollars for 130 AirTM dollars
Hmm.
because they could then withdraw their 100 AirTM dollars to local currency in about 30 minutes, as opposed to following PayPal's native flow, which would have taken
Yeah.
up to 7 days. And it would have been exposed to the real exchange rate, or the official exchange rate. Sorry, not the real, the official exchange rate. So it was going to be very expensive anyway. Might as well pay your TM 30% of my money, which is crazy, like double taxed, and cash out my money in minutes rather than waiting 7 days and getting exposed to that bad exchange rate in the future. And so that for us was a huge revelation. Oh my God, electronic payments are not working for people. They're not working for people that don't live in a country that's stable enough, that has balanced flows or enough balance on their cross border flows to allow PayPal to give people a decent exchange rate and a cash out speed, or the local infra is not there. And so that needs to exist because people are telling us that they're willing to pay us 30% of the money they earn for that solution. And so that was a huge insight that pushed AirTM to further down the idea of, okay, let's build electronic payments, a new version of them. And this was all happening pre-stablecoins, pre-USDC, pre-Tether, I guess contemporary to Tether.
Yeah, probably right around
Uh,
the same time.
yeah. And that's why we said, hey, well, a new version of PayPal needs to exist because PayPal cannot deliver money to people decently. So they shouldn't be doing that in the first place. So we need to build an enterprise grade version of AirTM that's compatible with AirTM, which is compatible with people's money. And
Mm-hmm.
so in that way, we got into the world of mass payouts and cross border payments. And lo and behold, yeah, delivering a payment using our enterprise tools to an end consumer takes seconds. It costs a fraction of what it costs with PayPal. And I think what we are seeing that enterprises themselves, they are adopting embedded stablecoin functionalities. We got some bets right. One of the bets that we didn't get right was that I think enterprises are showing that they care for stablecoin agnosticity, where they just want to deliver stablecoins on whatever chain and to
Mm,
give
yeah.
that as a feature to their customers instead of saying, no, we want payouts to like the most connected stablecoin wallet, which, I guess we have to rethink some things, but we are seeing adoption of PVNK in that way, which is great signal for our industry. And I think it's just important to note that a payment only starts on the origination when it gets sent, but it finishes when it gets cashed out, and where people are actually able to use that money for whatever they need to use that money. And I think it's that collaboration between the origination and the destination start and endpoint that will make our industry, um, I guess, become what it's meant to, like better payments.
Yeah. So it's the collaboration, it's ensuring that you're not getting charged significantly high fees on both sides of the transactions, that it's a rational process for the end user. And I think that's what you guys have done really well. But here's what people miss sometimes: it's not just about the workers in South and Central America dealing with this. I mentioned this because at the beginning, but small business owners everywhere stress about payroll. So, did your clients' payments clear? That's a question you're constantly asking. Does your account have enough to pay your team on Friday? What's the universal pain point that connects all of this together that you guys have seen?
It's very simple. It's the last mile. We need to be able to deliver money to its destination quicker and cheaper than anyone else. And by doing so, you make your destination the best destination. And there's bells and whistles, yield, card products, etc. But the core of it is people need to use their money, and they need to use it now because money's tight, and they need to be able to cash out very fast, and money's tight. They cannot afford to pay a lot of money.
Right,
And being able to process a $10 transaction and charge 2% is very hard. It's not very profitable.
right.
Um, 16% of AirTM's payments, I think, are under $10, which is crazy. And that's, millions of payments. And that just shows how solid last mile coverage is key for, I guess, the solution truly being a solution, and what stands out the most out of AirTM amongst the rest who built interoperability on that first leg. AirTM is definitely, it doesn't shine because it's stablecoin agnostic and multi-chain compatible. It's very much like married and tied to the hip to Stellar and USDC, but we're connected to 480 payment methods.
Yeah.
And so I think that um, just puts one in contrast with the other and their relative importance.
I definitely have always thought about you guys. I mean, I've known you guys for a long time and I know you well. And it feels that it is that last mile piece. That last mile piece is the secret sauce that you guys have figured out. You talked about stablecoins. You talked about you did this before stablecoins. You brought stablecoins into the platform, and that was a breakthrough for that. You're now working with Bridge, a Stripe company, to move USDC on Stellar at scale. So we're in the game, so we know the lingo. But for someone who's never used a stablecoin, can you break it down? Why is digital dollar access such a game changer? Not just for protecting savings from inflation, but for actually getting those payments across borders.
Well, the way I think about the value of, I guess, the stablecoin standard as opposed to the centralized wallet standard, and you could think of PayPal, and I know PayPal is migrating to the open stablecoin money standard where
Right.
their balance can live outside of the realm of PayPal. Is that in this new era of money, the paradigm from, hey, I offer electronic payments within my, I guess, ecosystem, and you could use my electronic money within my ecosystem, and then I'm gonna gate my ecosystem. If you want to leave, you have to pay. It's changing to, hey, my wallet's one thing, but your balance is your money. So, dude, take it if you want.
Mhm.
If you don't like my wallet, take it someplace else. If you can pay for it outside of the bounds of my ecosystem, I'm not going to prevent you and charge you a fee. So I think that's the paradigm shift, open balances. And I think for the end consumer, it means that if they get paid it is something. It is something that they could use to pay for something. They could use to fund another wallet openly without restrictions. They could save it. They can invest it in the ecosystem of applications which are compatible with it. And so I think that that's what's different.
And I mean, we talked about the last mile piece because that piece of it is the hard part, frankly, I think, and the part that is a really has always historically been a challenge to solve. And that really what you're talking about is getting them access to that last mile really helps to bridge the gap between receiving that USDC on Stellar or whatever, and then actually the spending power in the local economies. I mean, what you're really doing is creating that opportunity for end users, whether they be small businesses or individuals, to have that spending power locally.
Totally, 100%.
And for you, when you think about that, and have you seen the impact that this has had on the places that you, I mean, I know you've spent a lot of time in the regions that you guys work in. Have you seen that impact on the ability to have that empowerment, to have that the access to those funds to spend?
Yeah, totally. And I've actually seen it firsthand where I hate to make it about me or not to make it about me, and I hate doing so. But I've recently invested in my wife's new business, and I'm like strapped for cash sometimes. And it's crazy how important it is for me to be able to move money quickly and reliably, to be able to spend to pay for like food right there and there where I'm like sitting on the table, right? And I think that just it made me really appreciate the value of reliability,
Mm,
where even if it's late, if your expectations are managed, or if it's slow and your expectations are managed, you're fine. But if it's not reliable, you'd rather not even use or indulge it because there's no messing around when it comes to your money because you need your money. You need to pay your bills. You need to buy food. You need to do whatever it takes. And so I think reliability is actually king. And I think that's what AirTM kind of brings to the market on top of speed, which is we've been here 10 years. We're not going anywhere. Your money's safe and our systems work. Sometimes maybe they're a little slow, but they're
mm.
actually very fast.
So you're dog fooding your own product, which is exactly what you want to see everyone be able to do. But let's talk about what you just the idea and think about CFOs and operational leaders listening to this. You're working with AI companies like Sapien, BPO firms, freelance marketplaces, companies managing global workforces at scale. So, since launching with Bridge in March 2024, nearly 50% of your enterprise payout volume flows through this integration. And those numbers I mentioned before, the 250,000 recipients across 150 plus countries, when you're in the room with the head of finance or a VP of operations who's dealing with and doing the payroll the traditional way for years, what's the conversation? What are they optimizing for, and how do you make the case for stablecoin payouts?
Honestly, and I have to be frank, I think that the CFO is probably uh, just into making more money. The world of payments is one where people exchange value with each other to be able to monetize value more. And so I think what moves the needle, frankly, is our revenue shares. And we allow people to monetize payouts that they do in a lot of cases. And that's a standard where Payoneer gives you a kickback of the money that you deliver as an enterprise. However, we can reach further away. We could reach further away and deliver less amounts of money. And I think that that's a solid niche
So
for
wait, can
AirTM, and it's
explain
our,
that you can reach further away because of the global
yeah.
scale of the business. But when you say lesser amounts of money in a cost effective way, that's what you mean when you say that, right?
Yeah, exactly. So you can deliver. A lot of people in the AI and labeling BPO space are delivering payments to people that are earning, sometimes $10, delivering $10, and then presuming to be able to make money off of that is difficult. But we make it happen, right?
Mm-hmm.
Because we deliver payments, very low value payments, with very low fees, and still make a ton of money as far as the margin is concerned. And so we can share that margin with our partners. And I think that moves the needle. Um, if it's not just the CFO, but it's someone who works at a marketplace on the ops or supply side of things. Like,
Right.
it's Airbnb and they're in charge of the hosts, but they more so care about the person that they're trying to make happy, because they added value in their platform, being able to get more money in their bank account faster. And that's the main driver. Or it might be to a specific geography where Honduras is hard, Bolivia is hard, Argentina is hard, Venezuela is hard, Angola is difficult, Egypt is difficult, Turkey is difficult. And so I think being able to deliver payments to these exotic markets is very valuable as well. And that actually is something we do all day long, delivering money to faraway countries, far away, maybe not geographically, but definitely in
Yeah.
terms of its financial connectivity. And then if you're talking more about, I guess, the CFO from the treasury perspective, and maybe they have a problem that they need to solve in terms of, hey, I have this money. I need my customers to be able to take it because I don't need it sitting around here, and they just need to cash out. But I don't have a good way of delivering money to them because God knows what payment methods that they're using locally. Uh, Let me just give them one size, or sorry, one solution. Let me use one solution to get wide coverage of stable coins in any chain, and let me forget about that nightmare. I think that that's the game that BVNK is winning.
Hmm.
Um, yeah.
Yeah. So when you think about it from that standpoint, the idea here is that it's also presumably more cost effective to be able to leverage at the fees that you guys are charging. Plus, they make money off of it. So there's just benefits all around. One of the things I always think about when we're building products, new products on new technologies, is it's not good enough to be as good as. You need to be better than. And it, for me, like what you just talked about, sounds like the solution is actually better than.
Yeah. And I would say it has to be an order of magnitude better than.
Yeah.
It's not even just, sometimes we're 50% better than PayPal, and that doesn't cut it, right? I think it needs to be transformatively different, like a true paradigm shift. And sometimes we contend against that because, we're a small-ish business and we have a high-ish payroll, and we want to not use our cash to like pay for that. We want to be a profitable business. And so the tension between offering what seemingly should be free at a marginal cost is very real, and
Mm-hmm.
definitely inhibits AirTM from truly embracing peer-to-peer payments,
Yeah.
which is the standard. And honestly, I think those days are coming to an end because we want to push the world forward, and that might require us to do certain things like, hey, it's actually not costing us money, so like here it is, you can just use it for free, which would be a radical paradigm shift, right? People have traditionally had to pay for payments. If you look like at $100 transaction going from Airbnb to a host using PayPal,
Oh yeah.
well, Airbnb is going to take 20%, but hey, they got you the job. And then PayPal's going to take 10% of that, of the $80 that are remaining. And so they'll take $8. AirTM, in best cases, could go down to 2.5%. most times we're at 50%. So we're
Mm,
50% cheaper than PayPal. And sometimes that's not enough, which
yeah.
is crazy, right? And I think it's very important for us to say, all right, do we truly want to be an order of magnitude better? Well, let's be 100% cheaper
Hmm.
because we're free. But it's a work in progress. It's migration.
Yeah. At Meridian, you mentioned that we've proven that stablecoins can do better. So this is getting that same theme, but enterprise adoption is still lagging. And so, what are you noticing that actually gets these companies to make the switch? Is it purely economics, or is there something that's holding them back? I mean, when I talked about the product has to be better, it's the fees, but it's also just the ease of use, right? It's everything has to be better.
Everything has to be better. And the other point I made was that I think we have all the right ingredients as an ecosystem. I'm talking about whether it's Stellar or Ripple or Solana and the applications. We have the right ingredients. So basically, we have resources and we have the proven ability to solve a problem very well at scale. But then there's these third parties, our clients that we want to bring over. And we have to understand that PayPal and the others have spent tens of years, decades indoctrinating an industry on their product, their way of doing things. And I hate to say it, but they're good. Like they're good. Airbnb is not dying because PayPal is not working out, and Airbnb really, really, really needs to pay people, right? Like if it didn't have that ability, it would not work.
Right.
So the problem is sometimes we make it out to be something that's not. And in some places, like you talk about Mexico, US, it's solved. Like you can kid yourself, like, hey, stable coins, we're really going to transform this one. But it's like, what are you going to transform? Payments are free, they're instant. uh, what more do you want? People are solved. Good luck convincing that person to using your product.
Mm,
Sure, they'll take your marketing money. If you give them a referral, they'll go to you. But do you really want that? And so I think there's those two things: us coming together to truly compel the industry, which we know how it's done. It's basically marketing at scale.
yeah.
And the other is focusing where problems still exist, which might not be the most attractive markets, but there's definitely a few dozens of markets that need better services. And we are definitely on this migration to a world where payments are going to flow on chain, and it's a big value chain. So I think there's a lot of innovation there and a lot of efficiencies that will come up, and very valuable companies that will arise out of this. And as far as enterprises, I think we're going to have to compel them. We're going to have to help them help themselves. Like help them very clearly do things that favor them, where hey, this is going to help the Airbnb host you're paying
Yeah.
receive 30% more money,
More money. Yeah.
because in this country they're going to be losing this much money when they're cashing out using their current payment method. So do you want those hosts to like be very happy? Yeah. Or it might be, hey, we can monetize this one. Let us give you a kickback for every dollar you land in our wallet. We'll give it back to you, without making it more expensive for the end consumer. Or it might be, hey, you have this huge problem, it's a huge headache with your treasury. Let us help you solve it. And I
Mm,
think that's more the BVNK route. I like BVNK. I like Bridge. I like them all. I think they're huge unlocks on the industry.
yeah. Eliminating that FX risk or making sure that the risk is as minimal as possible is also, I think, probably the speed at which it gets there, and then making the fees rational around that is also a really important piece.
Totally. And I'll say something which might be a tell, um, but it's fine. We at AirTM are at this inflection point in between being like a medium sized to a larger size provider, if you exclude the outlier PayPal. But if you're talking about everyone else, we're right there on their heels. PayPal is just too big. Um, but we are seeing that the payments industry is super mature. they are winning deals with Excel sheets. They're being very practical about a specific corridor in a specific country and a specific rate and some basis points versus JP Morgan's basis points and how yours measure up against them, and whether you could commit to giving an exchange rate a week in advance, and you have to like hedge yourself, and it's it's a very sophisticated ballgame, the ballgame of money, because it's the world's biggest industry. And so I think that there's a level of sophistication that we need to have in a very humble way that we don't yet have. And I'm talking very self analytically about AirTM, but also as an industry who's thinking, yeah,
Yeah.
I have my very cool stablecoin wallet, and all these payments are going to flow here, and I'm going to cash them out. It's cheaper. Well, no, you're not, and it doesn't matter if you can cash them out because you're not going to receive them because you have to buy those flows by compelling someone to give them to you by showing them how you're going to make them more money than the other one.
Or save
So,
them money. Yeah, make them money or save them money. But yeah, for sure.
sure.
Yeah. No, I mean, this is a, I think that this is, you're right about the space. You're right about the fact that, well, the space started in a very arrogant way, saying that it was going to displace all of the traditional financial infrastructure. And we haven't seen that. We've seen that what works really, really well is when there's the ability to enhance traditional financial infrastructure with what this amazing, with tools like yours. Like you can make it better. You don't have to supplant it. In fact, you're not going to, but you can make it better. So I think that that's the, and it's making sure that the tools are easy to use, which I know AirTM is, and this is the way that this is the path forward. So from an infrastructure perspective, you guys have moved your users onto Stellar, open rails. They matter to me. They matter. They matter. But do they matter to enterprises? Like especially open rails. I'm talking about when we hear things like they don't really care about decentralization and that whole philosophy, and they don't really care. All they really care about is uptime, cost, and not getting locked into a vendor. Do you think, you as an enterprise, do you care about those open rails, and does that make a difference to you?
Sure, of course it does. They make a difference because I guess we leverage them to give better services ourselves. And I don't know that you actually make me think of a totally tangential topic about, verification and how closed that is and how detrimental it
Yeah.
is for it to be closed for our customers, as opposed to other parts of our infrastructure which are very open and therefore cause very seamless, smooth native experiences. Like moving money is easier to get verified, and I think that that's just a good contrast. And as far as enterprises outside of, AirTM caring for decentralization, you told me early on in the days in which we were all about Web3 that we got to define what that meant for us. And I think we have to understand why decentralization matters, not to us, but for the customers that we're trying to serve. And I think so long as we do that, sure, maybe we can find a way in which decentralization benefits parties, enterprises, but it won't be just for the sake of it. Very specifically, I think having a decentralized balance is great. If you're a payment service provider, it's great. It's great if you're a customer of the financial service provider, and you could see enterprises like PayPal or like Western Union embracing open balances because they launched or in the process of launching stable coins. So that's a level of decentralization. And I think you also see some of the disintermediation type where
Yep.
you have enterprises hosting mass payment products or services through the likes of BVNK. It's because they have such a good product. I'm kind of in love with their product for like this week has just been like, man, it's a good product. But they are giving the ability to a marketplace to disintermediate PayPal, where they themselves can own actually delivering a payment, right? Like the your mass payment protocol or product or ours, but we are sort of a skin on top of. decentralized payments, but they
Right.
actually allow you to embed that functionality and send payments, and they give you travel rule compliance, and they give you licensing coverage for your flow. And it's a great product. And in that way, they are disintermediating a flow which used to have a middleman. And so that's a different version of decentralization. And I think we entrepreneurs, as we're taking something to market, or entrepreneurs from within the bounds of these enterprises, you have to take a critical look at how these tools could benefit you. And it's definitely not Windex on my big fat Greek wedding that cures everything, but it very might well cure some issues or pains that you have with payments or your treasury. And if it's mass payments, we're happy to help you understand how we can help you.
Yeah, I think that's really important. I love that you remember like our conversation from years ago. I've always believed that you can't just like say decentralization and be like everybody jump on because it's great. You really got to prove that it's actually valuable. Because if decentralization for decentralization's sake is not useful, but when you think about the speed, when you think about the lower costs, when you think about the uptime capacity, all of those things, and also just crazy to think what you just mentioned about the idea that it is immutable and transparent. And that is like a huge piece for a lot of the world. And it frankly should be a huge piece for everybody. But that's a really important part of it. So it's something that we need to not necessarily talk about all the time, but it's important that we recognize what value it brings. You've mentioned before that reaching markets that traditional rails can't serve, that's an important piece for you. So right now, as you said, you're reaching those 150 plus countries. How much bigger could this get for you?
I want to try to give you like a good answer. That's why I'm maybe taking some time to think about it. But look, we've all seen this little two by two Punnett square of payments. Payments flow between businesses and businesses, businesses and consumers, consumers and businesses, or consumers to consumers. And AirTM very narrowly right now is focused on payments that flow from businesses to consumers. And we help consumers receive payments from businesses themselves. We give you a virtual account. You could use that to receive a payment from Airbnb. We help the enterprise deliver a payment to you, and we give them stablecoin mass payment services. And we sometimes have relationships with payment service providers like Payoneer, hopefully one day soon PayPal, that allow customers from these wallets bring in their money to AirTM, money that they originally earned online, and then cash out. So that's very narrowly where we're focused. Furthermore, we are especially good at delivering payments to a subset of countries which some might consider exotic. And so because of the nature of how our rails are. We'll deliver a payment to Bolivia, Honduras, Nicaragua, Argentina, Bolivia, Angola, Turkey, way better than anyone that you've ever seen, faster and cheaper. And some others as well. But that's still niche, and there's bigger markets. And I think as AirTM evolves its liquidity pools, or sorry, its last mile liquidity pools or its last mile ramps, I
Right.
think we're going to be able to facilitate other flows in that little two by two, where not only will people be able to use AirTM to receive payments from businesses and cash out, but if we enable higher value transactions through more simple and direct integrations to local payment methods, an SME should also be able to leverage AirTM. There's no reason why someone wanting to buy something online couldn't deposit $1,000 into AirTM and then spend them with a card, which is the consumer to business flow. And there's also no reason why people sending money to people across borders could do the same. And I think because it's a function of the last mile ramps and those being very compatible, that's why AirTM is very much focused on those, because those open up AirTM's market to more of the I guess payment industry, where right now the portion of it in which we play well ish, because there's some markets that we don't have great coverage in, it's important to be honest about it, represents $2 trillion. And yeah, it's a lot. It's basically PayPal's market. I guess PayPal has a little bit of everything, but that's uh, a chunk of it. However, the biggest chunk of it is on the B2B side.
Mm,
That's 31, $32 trillion.
right.
Even the consumers buying things from abroad with a card, that's a $4 trillion industry. And so, and remittances is kind of the same size of business to consumer payments, 2 trillion roughly. And so I think we by furthering our market depth, improving these local off ramps, we are able to expand. And I think the sky's the limit. I think everyone needs a wallet at some point to receive a stablecoin payment, whether you're a business, a consumer, using us to buy things, pay for things, save money, just cash out, whatever. You all need a wallet. And so in that case, the best wallet with the best rails will win and could probably play in every industry. And so I think that the sky's the limit.
Well, I love that. I also think it's really important to think through what you just said. B2B is crucial. B2B is where you have a lot of opportunity for growth from a revenue standpoint. But B2C is where you have stickiness. And B2C is where you have users who are going to rely on that last mile. And that's a really important piece. Having both of them, which is what you do in the wallet, is pretty special. And that's one of the things that I think you guys have been focused on. And also that last mile and the local payouts is huge. And I think that a lot of people miss that because they focus on the send side, but not the receive side. You started AirTM during one of the worst economic crises in modern history. You were building financial infrastructure that governments actively tried to shut down. What was the hardest moment, and what kept you going when that path wasn't clear?
There's been so many hard moments, and you witnessed how hard it has been firsthand since the first month at AirTM. I came to you with a huge crisis, and you understood that at some point it was just part of the day to day. It's like you have a kitchen, people are going to get burnt, and you at some point, as you think about patience and its relative importance to the long term game, especially if you're starting the game from not year zero, but year, -8, it becomes very important. And at some point, it's as if you're running on a treadmill in one of these video games that sometimes the treadmill will bring you a gold coin and sometimes it'll bring you a pile of poop. And it's just a function of you running on the treadmill through time. You're going to encounter piles of poop or diamonds or hurdles that you're going to jump or just free range to run. But that's just the nature of startuping for such a long time. And I think you therefore sort of get to this mindset of I'm not even anxious about the next thing because we've handled all the last things and we're not going to let any next thing sort of get to us. And so we're not going to survive because we didn't get cut. We're going to survive because we learn how to mend the wounds and just keep walking.
And you have to stay focused on that vision, which I think you guys have. All right, this is the last question. If you had to describe the future of global payroll in one sentence, the world that you're building toward, so think about it like that, what would that sentence be? This is intended to stump you. I'm just kidding.
I'd say it's direct. Direct.
It's good. One word even. Wow. I like it.
Yeah.
Direct is good.
Direct from businesses to consumers. No middleman. Direct cash outs from consumers to their local payment methods. No middleman. Direct. All settling on chain.
All right. Well, so that's what we have to look forward to with AirTM. Ruben, it's awesome to see you as always. Thank you so much for joining me on the podcast.
Thank you, Danelle. It was a great podcast.
Oh, look at that. We got a horn honk. All right. Take care of you.
Thank you, Danelle.
So that's it for today's episode of Block by Block. Thanks to Ruben for sharing AirTM's story, staying patient, and proving that when payment infrastructure works, Everyone wins. Until next time, keep building.